Hello guys, so if you're new to the channel, make sure that you click the like button and subscribe. And in today's video, we're looking at trends and we're going to look at market structure in a way that after this video, you're going to understand each and everything about external market structure and internal market structure. So make sure that you click the like button and comment your views on this video here and things that I should upgrade on this channel so that we can get like more content and good content by the way guys nah? So as you can see here we have an uptrend, and normally most of you guys think that whenever we have an uptrend we just look at buying opportunities, but like I'm just going to show you that you can also look for selling opportunities, just because whenever the market breaks structure like this, let's say maybe we have this break of structure here, we already know that this is our lowest point around here, this is our high, this is our higher low. So whenever we have a higher high like this means that we have a trading range guys, from this high here to this low here. That is called a trading range, and then we can look for selling opportunities from this area here up until an area of interest just like this, so that we can look for buying opportunities. For example, let's say maybe you're looking at a trend on the 4-hour time frame. The market can take a lot of time for it to reach like this area of interest, let's say around this point here. It can take a lot of time to reach this point, so rather you take selling opportunities around this point up until this area of interest, so that you can look for buying opportunities to take out this high. And then after the market takes out that high, then we know that we can expect another selling opportunities, just because you're looking for what, a sell at the top of the structure to reach the bottom of the structure, so that you can buy and sell within this area and then buy again. So this is an overall uptrend, and then I'm gonna show you how to do that guys now. So this is an overall uptrend. Like I said, this is your high, this is your low, this is your higher high, this is your higher low, then this is your higher high, like that. And like I told you guys, this is your protected low, and then this protected low here means that whenever the market takes out this low, it means that we are no longer looking for buying opportunities, instead we're looking for selling opportunities. So for example, let's say maybe you're taking sells at the top of the structure just like this to tap into an area of interest around maybe this area here, then the market decides to drop below. So this means that this is no longer a valid sell or buy opportunities. Instead, you are going to look for selling opportunities maybe at an area of interest. You're just waiting for the market to pull up and then pull to the downside just like that. So those are things that you do not understand guys, and then I'm just going to show you how to do that, how to plot out like everything in a correct manner, just because most of you guys lose money in areas whereby you can make a lot of money. So I'm gonna show you that guys in this video here. So break of structure, then we expect buying opportunities just like that. So range bound markets, so let's say maybe this is a consolidation or a range, however you want to call it. We are not going to trade this type of structure just because there is no higher highs or lower lows, just because we look for a trending market, just because this is not a trending market. And then if you're trading this type of formation or this type of price action, you're going to lose a lot of money. So getting into the downtrend guys now, so this is your lower high, lower low, lower high, just like that. Then whenever you get a break of structure like this, most of the time the market has to pull back up, and then you can expect like maybe some buying opportunities into areas of interest. Then you can look for selling opportunities. That is how I trade the markets, but like I'm just going to show you everything. This is just like maybe an illustration of how to look at the overall market structure. So we had a break of structure, so which means that this is our low, this is our lower high, tapping into maybe an area of interest, is because the market can just give you a long trading range whereby you have this high and this low here as your overall trading range. So you just need to map out like using your Fibonacci tool from the high to the low. Then you can clearly see that the market tapped into that 0.5 level, of which this is a valid structure. So after breaking the low, obviously we know that we can expect some buying opportunities into an area of interest. Let's say maybe this is your area of interest, then you can look for selling opportunities. Then after the market breaks structures again, this is the same anticipation that you're looking for the market to buy into areas of interest just like that. Let's say maybe we tap here, then that is when you can start looking for selling opportunities. So that is how you have to look at structure. So we are going to look at CHF JPY or CHF JPY, and then we're going to look at the 4-hour time frame just to map out the structure so that you can understand how to map out structures on the higher time frame, just because the lower time frame is a bit simple, just because we're looking for entries, confirmations, or risk entries, guys. Now, so let me just remove each and everything that's going on here. And guys, while you're at it, please make sure that you subscribe to the channel, just because we are on the road to reaching 10k subscribers. So we are on the 4-hour, guys. Now, and what I like to use is the 4-hour time frame so that we can map out the structure. And I use a concept whereby it's called the 3 candle pullback. That is where I can confirm if we have a valid pullback or an invalid pullback. So let's say maybe we have this going on. So the first candle, the second candle, and then the third candle like this. So this is a valid pullback whereby the market was pushing up in this area here. Let's say maybe the market is pushing up in this type of area here. So give me a bit of time, guys, so that I can draw the structure, just because it takes me a lot of time to do this, guys. Nah? So I'm just trying to do it with you guys so that you can see how I do it. So this is like maybe the last candle. So let's say maybe we had a pull up and then we had a pushback. So this is a valid pullback just because we had 1, 2, 3, 4, and then breaking below the body breaks, ne? Breaking below the bodies of this candle here, breaking below this body of this candle here, breaking below this candle here with a body. So this means that this is a valid pullback, and then we can confirm that this is our high, this is our low, this is our lower high. Then we expect the market to push to the upside just like that, ne? So that is what I normally use, and then most of you guys do not understand this concept. But like in this video here, you're going to understand everything, guys. Like I told you, I'm here to help you. And then if you don't see the work that I put in on this channel, then I don't know, guys. You should just unsubscribe, just because I'm trying my best to make sure that everyone is learning for free. So we're just gonna pull back into the structure so that we can see everything that's going on, just because I'm trying to show you things that most of you guys pay for. You pay thousands and thousands of dollars so that you can understand what's going on. So let's see around this point here. So let's say maybe we have the structure here. So around here we had this high, we had this low here, and then now we are going to anticipate our highest point, and then we use the 3 candle pullback. So as you can see here, we have our 1, this was a weak creation, we have our 2, then we have our 3. So which means that this is a valid break of structure, guys, né? Valid break of structure, which means that this is our highest point, then this is our low, so this is our high, just like that. Just because here we didn't have that 3 candle pullback. As you can see, we had 1, 2 in equal areas, just like that, and then we had our 3 here. So this means that this is not our pullback, and then this is our overall pullback that is valid. So here we have a break, and then around here we can see that we had a pull up, push back, pull up, push back into an area of interest, just because I said this is a break of structure, guys, nah? And then we tapped into what, this area of interest around here, just because we had a fair value gap around this point. And let me just show that this is a fair value gap. And then after having this high, we expect a low, of which it's this one here. Then we had a new break of structure, of which it's this one here, guys, nah? And for those who want to learn more advanced price action, can just check out all the links in the description below, and also check us out on Instagram, just because we drop more content on Instagram also, guys, nah? So we have our low, then we have our higher high, of which is this one here, then we have our higher low, as you can see right there. So the market failed to pull back into any area of interest, and then decided to create a high and then a low, then a new break of structure, of which it's this one here. So after having a new break of structure, we already know that we have to respect this area of interest so that we can look for buying opportunities, of which that failed. The market failed to do that, just because it failed to break this high here. Instead, it broke this low here, which means that this is our overall change of character. Then after having a change of character, we know that we are no longer looking for buying opportunities. Instead, we are looking for selling opportunities. So from this low here, from this high here, we had the high, Then we had the low. You can obviously see that the market tapped into an area of interest. If you just use the fib tool from the high to the low, you can see that we tapped into that 0.5 level, of which there is like an area of interest, of which it's this one here, this area of supply here. Then after having that area of supply being mitigated, we had another break of structure, just because this was the supply. This is a break of structure right here. So after having that break of structure, what you normally need to do is that you need to use your fib tool from the high to the low. Then that is when you can anticipate areas of interest. But like in this case, we had this as our area of interest, of which the market mitigated that area, but it pulled up a bit, whereby some of you can think that this is another change of character, but like it's not. As you can see, the market pulled to the downside, of which it created this low here. Then this is our lower high right there, guys. So this is a new break of structure around this point here. So this can be like a bit confusing whenever you're starting off, but like what you need to do is keep on doing this type of practice, whereby you look at the overall breaks of structure, as you anticipate areas of interest. You are doing like this type of practice here that I'm doing here, then you're going to understand structures very nicely, guys. So as you can see here, we have to focus on the current structure. As you can see, we had 1 2, then we had the 3, so which means that this is a pullback, but like it doesn't make sense, just because the outer structure is this one and this one here, or areas that are a bit big whereby they are visible. So this is the first one and this is the second one here, and then we're going to use this as our overall supply area, of which it's this one here. So we tapped into that supply area, then the market decided to pull to the downside, whereby it was very nice, just because we sold off in a manner whereby we are looking for strong sells, guys. And then after that, we had a new break of structure, of which is this one here. So after having that break of structure, what we need to understand is that this is our highest point around here, and then this is our lowest point. And then as you can see, the market changed character around this area here, just because this was not a valid mitigation, just because this is a change of character. Like I told you guys, this high was not respected. This high here was not respected. Instead, it got broken through. So for now, what we're going to do is use the fib tool from the low to the high, and then now we can anticipate some buying opportunities into an area of interest. So we can just zoom out and see if like there is like an area that we can use on the lower time frame. So as you can see right here, 0.5, below this 0.5, we have this area here. So we have this demand zone around this point here. Then we also have this area of imbalance that the market can just try and fill. So what we are anticipating at the moment is for the market to pull down into this area here. Then that is when we can start looking for buying opportunities on CHF JPY, guys. So simple as that, guys. What you need to do is just focus on the current market structure. Make sure that you're focusing on areas of interest. Make sure that you're focusing on how the market is moving, is because we have impulses and corrections, of which impulses and corrections work on each and every market, guys. So I'll see you on another video. I hope this one was informative and then you got to learn a thing or two from it. Peace and love, guys.